It's been a wild year for silver. We opened up the year on January 2nd, 2026 at $74.50. We reached an intermediate top of $121.62 on January 29th, 2026. And we closed on Friday higher than we did when we started the year at $77.75. This volatility has led to a lot of charged emotions out there. And I mean, I have not changed my exit strategy target. It is still the same. We'll talk about that soon. But a lot of emotions. This type of volatility has stirred up a lot of emotions, a lot of frantic posts on social media, predominantly over on Reddit, Wall Street Silver and Silver Degen Club, the once beloved Asian AI guy, where everybody loved to hear him talk. And now there's a lot of anger, a lot of backlash on this guy. And I mean, I warned everyone about this guy. I even made a video using that AI avatar. So, for those of you who are not aware, Asian AI guy is essentially an AI avatar on the software CapCut editing software. I use that software when I compile the clips to make these videos, and essentially, it is basically a human whose voice has been pre-recorded, and you can paste text, anything in a text box, and have this Asian guy speak whatever is in that text. And I have alluded in the past that, my conjecture was that there's probably a couple of base channels and then a lot of copycat channels, because there was easily a good 2 dozen channels out there using all videos of this Asian AI guy. And I believe what was happening was they were going out there scraping YouTube transcripts, because you can do that. Because I noticed they were just taking ideas that others were speaking about, and they were basically aggregating all that information. They were likely pumping it into a language learning model like ChatGPT, getting some type of script, and then pasting it into CapCut and having this Asian AI guy talk about it. And on Wall Street Silver, on Silver the Gen Club, they're like, oh, wow, this guy's right. And I warned everybody that there was a lot of false information mixed in. And now this week, more than ever, it was this week because of this volatility, a lot of people got angry and they're like, oh, F this Asian AI guy, he's wrong. It should have been going up. I mean, like I said, my targets have not changed. And I mean, volatility is getting a lot of people very emotional. The major financial media outlets, they've really only been showcasing gold, silver, platinum, really for a couple of months now. It's not something that they've been talking about since the breakout. It's really only a topic that's coming up on Bloomberg, on CNBC, on Yahoo Finance, on MarketWatch, something that's now becoming daily. And that's the daily occurrence and narration about it has only been happening for a couple of months. And so this was very interesting to see, around January 29th when we'd hit that $121 and change. And then we had that very sizable 1 day correction. You had Market Watch say silver heads for the biggest drop in 14 years, with every man and his dog rushing for the exit. And what I think is funny about that is when silver broke out to new all-time highs beginning last year, late summer, when I started noticing on the charts that we're breaking into the 40s. And I think a lot of folks have were conditioned like Pavlov puppies to kind of say, we're going to get a price smackdown, because this is something that's just been happening for year after year after year. We reach this high, and then it just gets smacked down around. I'm not going to name names, but even on on Instagram and some of the other groups, there were people who were saying, "Oh, a correction is coming. You should wait. Just correct, let it correct, and then get in." And so when price started to go to new all-time highs on these peer-to-peer groups, I call them, like on Facebook, on Instagram, on Reddit, there were some groups, in some private groups, where it sounded like there was a funeral. They were not celebrating it, and that leads me to believe that a lot of people did not get on the launch pad. They got left behind. They were waiting for a correction when we broke into the 40s and subsequently into the 50s. They got left behind, and there was just It just like a funeral in some of these private groups. On man, you would think more people were celebrating, but it was only a handful of us. And the way emotions got charged and negative after the 121 intermediate top, it was just interesting. I'd had people coming up to me, we dropped as low as into the 60s off the 121, and people were saying, "Hey, why don't you buy now? Why don't you buy this dip?" I have no need to buy the dip. I've been on this dip since the launch pad. It makes no sense at this juncture. This is a slide that I used in a video in early January, and silver at the time was $78.26. That's not much different with what we closed in on Friday at $77.75. Nothing has changed for me. I have always shared the M2 adjusted target for silver. It is a dynamic goalpost because essentially, if they continue to print more, that number is only going to get higher. And just to reiterate, why do I always show a range? I have there $500 to $750 an ounce. And that is because in 1980, when we had the blow off top, it was an event that went into a steep acceleration. And that top happened in a couple of weeks, that huge price movement. So I believe that can repeat in this secular cycle. And that's why I show a range, because once you get into this range, things are going to move fast and you may have to act fast. So nothing has changed. I still believe we will see 750 an ounce, if not higher, if they go on another money printing rampage, all these central bankers. What you are seeing here is a chart of silver adjusted for the M2 money supply. And I always like to give credit where credit is due, because I really loathe the folks on social media who blatantly rip off people's work and don't give them credit for it. And so this charting comes from Value Seek on X, formerly known as Twitter, and he has very frequently, not just silver but also gold, but also platinum and also oil. He frequently charts these adjusted for the M2 money supply, because the M2 money supply does not include bank reserves. It's actually money in circulation, actually inflationary money in circulation. And so this is a zoomed in version of that chart. You're not able to see that parabolic top of 1980 where it reached $750 in today's dollars. What is interesting is that $121 and change that we reached in late January is just about the peak M2 adjusted dollars that we reached in 2011. So the fact that we reached the type of resistance on there doesn't mean that I'm the only one, or Value Seek is the only one seeing these things out there. There are others that are noticing this type of metric and are very cognizant to it. But like I said, this volatility has a lot of people emotionally charged. Volatility does not equal risk unless you're pressed for time. So the fund managers, they're pressed for time because at the end of the month they have to report performance of the portfolio they put together. At the end of the quarter, they have to report their performance. You and I, us home gamers, we do not have to report the performance to anyone. As I've said before, there's folks that are new to gold, to silver, to platinum, to commodities, and they say, "Oh, well, when do I buy?" And really, there's a lot of people out there, especially on Instagram, this past couple of weeks, that have been forever calling for a correction. Even before, they've been calling for a correction since January 2nd. They were already calling for a correction, and now they're tooting their horn after we corrected after 121 and change. But if you're new to this and you see that you want to move a portion of your portfolio, as I mentioned, big institutions like Bank of America, JP Morgan, they have recommended to position X percent, 10-20% of the portfolio into this sector. None of us could really predict the short-term gyrations, and I mean, to mitigate any psychological impact, always the best recommendation is dollar cost average. You say, I'm going to take some fixed amount of dollars, and whether it be on a weekly, monthly cadence, and you just buy little by little. That way you don't encounter any type of psychological shock in case you make too much of a concentrated purchase and then you see the price drop. Then that kind of bothers you. So if you just say, I'm going to have a very fixed schedule, be it weekly, be it monthly, That's the best recommendation I can make, because none of us can predict the short term. I mean, we all have to do our own due diligence, talk to our financial advisors, and kind of make a decision that way. But to mitigate that financial shock, that psychological shock, dollar cost averaging is the way to go. If there's one chart out there that showcases how underallocated the public is in general to this sector, it is the CRB Commodities Index versus the Dow Jones. Some of us that were early to the party, I know people who mentioned they started moving into this sector at the turn of the millennium, at 2000. I got in around the great financial crisis, and you're looking at this ratio chart here, and I was of the school of thought that around 2011 we were going to see this um, huge trend shift and have a breakout above that top blue line back in 2011. That did not happen. We went on a kicking the can course. The Fed basically inoculating the markets with more and more money printing, exacerbating money printing, and then we had a huge money printing event in the that event that happened in around March 2020. I'm not going to say it. It appears to be something that gets filtered from content, but we all know what it is. And we had a very major money printing press event around that time. And so this chart just shows us how far we are off in terms of like the public being completely under allocated in this sector and heavily allocating in general stocks in the Dow Jones and the S&P. Dow Jones just hit an all-time high again, 50,000. I've been asked, how can you believe in an AI bubble and then expect commodities to accelerate in price? Yes, one of the big drivers is the government designating certain critical minerals, adding them to a certain list, and they have announced that they're going to be building stockpiles of these minerals. And if I believe AI is a bubble, how can I mean, if you lose that investment in whether it be RAM chips, graphic cards chips, etc., if that bubble pops, then you're going to lose that in that portion of industrial demand. And what I believe is I think AI in terms of language learning models, things of that nature, is going to pop. But what I see happening is what is already happening in corporate America and the enterprise level. We are seeing some of that at home. So suddenly, software like Microsoft Office, Microsoft Power BI, a lot of this software is suddenly something where you don't just purchase once and an enterprise owns it, or you as an individual own it at home. I think what is happening is that they're buying up all these chips, all this computing power, and what is going to happen is the cost of computing in general is going to be out of reach from the retail, from you and I sitting at home. I could see them making it where it's no longer you just buy a computer and then you have a computer and you own it. I believe that the processing power, all these parts and everything, is beginning to become so expensive. And the same way enterprises have to subscribe to cloud services, to virtual logging into virtual machines, I could see the future being where you and I, all like a toll collector, we have to pay a monthly fee to access computing power, where we will basically have a workstation at home and we subscribe and we connect to a remote machine and we do all our work, all our browsing or whatever else on these virtual machines. I see that as the future. And I mean, everyone's talking about how the prices of these of RAM is going through the roof. And so what is happening is they're buying up all these resources. And while I see a correction in terms of the realm of language learning models and a lot of people over crediting what they can do, I mean, they will get better in time. But what they can do right now, there's limitations. I use it on a daily basis. There's limitations, but I do think these companies, they're going to be buying up, just like the government, all these critical minerals that are needed for all these chips. And then you and I are going to be priced out of having the ability to buy a computer at home that can do all the computing. We'll be likely forced into a subscription economy. It just keeps expanding. Here is a statistic I saw that highlights how overpriced stocks are at this juncture. A lot of famous institutional investors, big hotshots that made a lot of money, they get interviewed a lot on financial media. There are people that made money shorting Japan. In the late 80s, they made a lot of money in that. And they talked about how Japanese stocks were highly overpriced. And at that time, to show you how overpriced they were, Japanese global market cap, their stocks represented 50% of the total global market cap of all market capitalization for all stocks around the world. And we compare that to today, the United States. United States represents 65% of global market cap compared to the total market capitalization of the world. So if this doesn't highlight an extreme, then I don't know what does. I have mentioned the real possibility that US stocks could stay elevated artificially. And so, in nominal terms, they may never see a real sizable correction. But what will happen is, in real terms, when you price the Dow Jones or the S&P versus gold, then you're going to see that it's dropping in real terms. And why I think that may be a possibility in the probability space is, a lot of American businesses and even people, us, the majority of us depend on our 401ks for retirement. A huge correction can just exacerbate a crisis, and I could see the government in terms of mitigating that by printing more money and propping up the markets. I mean, in terms of American businesses, there are a lot of businesses out there, even in the sector I'm involved in. There's a lot of businesses they cannot make money in their core operations, and they're making up for the shortfall in margins by what they're making from non-operating income. And what is non-operating income? It's just basically fancy language for them and the investments they have in the market. So basically, their investments in the market are making up for the shortfall in their core business. And now you talk about everyday people, you and I, people that have money in 401ks, they're depending on that money. They see those statements coming in on a monthly basis. And, you know, if that all starts unwinding and we see a huge correction, that could be catastrophic. So it is possible that we may never see a crash, a very substantial crash, both in magnitude and in time in nominal terms. But I do believe we are already seeing it in real terms. The Dow Jones, the S&P, they're losing value in real terms versus gold. Something else that has caught my attention this week, seeing this in the Financial Times, uh, Xi Jinping calls for China's renminbi to attain global reserve currency status. And I don't know, those sound like where I grew up, those are fighting words to me. So if this is being published out in the open, it's a real challenge. Um, there's a lot of discussion how China had investments in Venezuela, and the U.S. Invaded and captured Maduro, and basically people think, oh, they kind of kicked out China, but China's all over Latin America. They built a major port in Peru, the port of Chancay, and I mean the U.S. is not behind the ball on this. They're trying to catch up, and now President Trump is having a lot of escalating situations and talks with a lot of countries from Latin America. So these look like fighting words to me. Libertad aficionados, the next coin up to bat is the 1989 1 ounce proof. And for this one, there are two varieties. The more common one is the 999 without dot, and the rarer version is the 999 with a dot. And the 999 basically refers to that the coin was struck on pure silver, 0.999 of purity. And so the most common one is missing the dot right there at the bottom right. And after the word lay, it just says 999. And then the with dot variety, the rare version, we see a dot right there. And I will show you a zoomed in image shortly. So these are the two varieties. This was a very shocking experience to me. The prices really have accelerated from the last time I looked at the 1989, and we'll talk about that shortly. In terms of mintage, this is the same slide we looked at for the 1988, and it is the same slide because 1989 also has a mintage of 10,000. But like I highlighted last time, the 88 and the 89 are the most valuable coins out of all of these that have the same mintage of 10,000 mintage. And I had suggested, in the 1980s, you had a lot of peso devaluation crises in Mexico, and Mexicans, and during devaluations, there's Mexicans that save in silver. And so if you have a devaluation, they will take the latest years that are out, and those they will sell. And when they sell, a lot of times these coins, they get melted, they vanish, they're out of the, although 10,000 may have been minted, the surviving number is far lower. And I think the market prices of the 88 and the 89 highlight that then. Here are the close-ups from the electronic microscope, focusing in on what each of the varieties look like. And then you see there with the width dot before the three nines, you are seeing that dot there and in front of it. That is the much rarer variety, and as you'll see, it commands a higher price. And on the right, the standard variety, the more common one, is missing that dot. And in terms of valuations and recent comps, the 89 actually has some recent eBay comps, and so I was able to pull up some information on that. So the standard without dot right now is selling at top grade at a PF 69, because you can certainly get it for a lower price raw or a lower grade, but the PF 69 is selling for about 750. And as a frame of reference, back in 2021, when I purchased my first 89 without dot, it was a grade 68, and I got it from Great Collections for like $200 to $210. And so I think I got the PF 69 maybe 2 years ago or so, and that one was about $500 back then. So this one has gone up in price. The one I was rather shocked about was the with dot variety. For a while, the with dot in PF 69 grade, it was going for about $1,000. I got mine in 2021 at about 700 to 750, but about a year ago, this one you could obtain it for about $1,000, maybe 1,200 tops. But now this one has accelerated substantially. I think the market is finally starting to realize that the one with dot is a much more rare, and I'm seeing recent comps between $2,000 and $2,500. I hope you enjoyed this video. Don't forget to like and subscribe if you're not already a subscriber. Whether you agree or disagree, leave a comment. Let me know your thoughts. And in particular, if you have questions on Libertads, any doubts, definitely feel free to reach out to me, whether it's on YouTube, on Instagram, any of these other peer-to-peer groups. I'll be more than happy to answer. See you next time.